Welcome back. You're watching Startup Street. Now, former Axis Bank executive Rahul Gupta and Stride Ventures' former founding member Siva Panda have joined forces to set up a new venture debt fund, Valuable. Now, Valuable is looking to raise 850 crore rupees or a little over $100 million in its maiden venture to invest in tech-first and inclusive startups in India and globally. It is going to be an ESG-aligned debt fund and back startups in the pre-Series A to Series A funding stages. Joining me now to give us an insight into what this new fund is going to be doing is its founder and managing partner, Rahul Gupta. Rahul, welcome to CNBC-TV18. Thank you very much for your time here. But, before anything, this 17-year career you've had in banking, before now, of course, you've gone on to start this new venture as its founder, this with partial visual and auditory impairment. Tell us briefly about your journey and what led you to start this new debt fund.
Thanks, Sidhu, for having me here. And the last 17 years, well, nothing short of a great celebration, just trying to leverage that. In my last role, as you said, I was the head of sponsors coverage for the group. Did that for over 3.5 years. Between this period, besides taking the bank's market share up in the sponsor space, led two large partnerships in the developmental space, both on e-mobility and healthcare. Prior to this, I was in London as part of our subsidiary, built that from scratch, was the head of wholesale bank there. Prior to that, led the global corporate business and the MSME business for the group. So completely an entrepreneurial journey within the group. Did my degree in economics from St. Stephen's and Delhi School of Economics. That gave a solid foundation. Talking of Valuable, I think the journey kicked off as a banker, met a fund manager at Strides Venture. I used to make LP investments on behalf of the bank. And that's where majority of our discussions used to revolve around the gaps in the startup ecosystem. But I think we found a chord as we realized the need to blend into business. We believe that, of course, ESG is important, and we'll soon be blending a new dimension, which is culture, into that. We believe we are not just there to great companies, but responsible companies.
Rahul, by when are you hoping to close this entire 850 crore fundraise? How much have you already done?
We have been constantly blessed by investors, both domestically and internationally. In fact, been an overwhelming journey. I'm not in a position to leave the number with you now because it's still growing up. But with the way things are progressing, we hope to wrap up or come to the market with our announcement, hopefully very soon. I'll have another opportunity to talk to you, maybe within the next few months. But markets clearly have been very
okay. We'll wait to hear in the next few months from you. But give us a sense of the investment strategy in terms of what sectors and companies you're looking to invest in this ESG sort of alignment that you have the fund with, and what sort of returns are you targeting?
Sure. I'll break the question into two parts on the investment thesis. We are clear we are not going to participate in sin sectors, gambling, alcohol, tobacco, and other sin sectors. The businesses need to clearly demonstrate scale, return, and sustenance on a non-negotiable basis. Post that, we look at three pillars. One, climate. Of course, you've got a company lined up post this. Second, we look at companies that are driven by inclusion, which is an important pillar of our strategy, which is businesses led by the diversity groups or businesses empowering diversity groups. Diversity is largely, generally, often, thought of women, but we want to expand the thesis to include women, queer, persons with disability, aged, and other marginalized. The third important pillar to us is Bharat, which is anything that is grassroots, but will also encompass complicated technologies around space tech, defense tech, and others. From the return perspective, we see another gap in the market, and what we are doing, we'll be partnering soon with a leading Indian private sector bank. Again, I'll have another opportunity to come to you very soon. But with that partnership come in, we see it's going to be a win-win situation, both for our startups who crave to get the right cost of capital, but also for our LPs who we believe have been deprived of the right returns. Given the market has really been seeing only competition and a price war. We want to bring that stability with our partnership with the bank.
Okay, we'll wait to hear more about that partnership with the bank. But, in total, how many companies are you looking to invest in? With what ticket size? How many are already in the pipeline?
So we have seen over 80 odd companies with over 15 in the pipeline. We are close to taking over 5 companies to our IC very soon. Phenomenal companies, we are very excited. The average ticket size is going to be anywhere between 2.5 to 4 million. With that maths, we'll be doing over a 3-year period, we should be doing approximately 50 odd investments on a churn basis. And just a correction, while we'll start looking at companies from pre-Series A and Series A, but we will look at across the life cycle. So we do not limit or stop ourselves at Series A, but if there are great credible businesses at Series B, C, and beyond, they'll well be in our radar.
All right, Rahul, that's all the time we have, but thank you very much for speaking to us here on CNBC TV18, and we look forward to hearing what you do next.
Thank you so much. It's been a pleasure, and I look forward to be engaging with you, and hopefully we'll redefine the contours of inclusion in ESG. Thank you.
And moving on, Urja, clean tech